I'm joined here by Max. Really looking forward to this interview. So, Max, why don't you start by giving us the quick background into you and why we're talking?
Sure, I'm happy to be here. So my name is Max. I'm the founder of Finis. We're building the most engaged global finance community. And I really started the company out of this personal journey. Essentially what had happened was that I was in my late 20s at the time, and I was doing what everybody told you to do, which is take some money from your salary and put it into a savings pot. I did that for a couple of months, and then one day woke up and realized fantastic news. I've built up savings, and the immediate follow-up question was, what do I do with those savings? Mm-hmm. And the natural first step for me was I went to go see a financial advisor. The issue there was that the moment I walked through the door, I noticed that they had all the brochures laid out on the table already, and I saw each brochure had their logo on it. And I realized very quickly, okay, this is a sales pitch for your financial product rather than you genuinely trying to help me. And I knew right away that wasn't the right solution for me. That then got me started on this journey, which then later turned into Finis.
Right, cool. So for people that don't know, and Finis has very kindly agreed to partner with us on the summit, so that's very good. And let me just share my brief story on that. So I'll try to remember who put me onto it, but I joined your newsletter about 3 years ago. And if anyone hasn't done that, I strongly recommend going to, at the very least, go and join the Finis newsletter. It comes through, it's basically the day's happenings in 3 minutes, and always written with very clear, but with good humor, which I personally really appreciate. And from a German as well.
Well, I don't write it. So.
No, but I really enjoyed it. So having the opportunity to work with you guys after 3 years of being a fan is fantastic. So look, you started this business, as many of us do as entrepreneurs, to solve a particular problem that you had. So can you talk a little bit more about that problem? Because I guarantee that we've got other people watching this right now that are also sort of, and look, there's no shortage of information out there, that's for sure. But trying to filter the signal from the noise is difficult, and the sales pitches, as you pointed out. So what are some of the problems that you were seeing there?
Yeah, so maybe I'll start briefly with my own observations back then, and then basically backing up with a couple of more macro trends there. So I think for me, what happened was, so first of all, I wasn't a total layman. I had studied economics. It wasn't like I didn't know what an interest rate was or anything. But I knew when I looked at the different options back then that there was robo-advisors, for example. And I knew that's cool, that's great, but I probably shouldn't put all of my money into a robo-advisor. And then I thought, okay, but if I ever want to buy a house, like how should I think about that, etc. And so there wasn't really a platform that would answer all these questions for me. And at the end of the day, it always felt like they were incentivized to just take all of my money because that's how they make their money, i.e. they all get paid either by commissions in the instance of the financial advisor. And I think what's crazy to me, sometimes in some countries, financial advisors get paid 100% on commissions, which to me is insane. Because that is the most hardcore version of a salesperson that you can imagine, basically. And you cannot argue that person is always acting in the interest of the client. So I think there's like a very systemic problem there where something's broken in the way it's working right now. And then on the other side, you have all these robo-advisors and new platforms that are great, but they always kind of really only cover a tiny slice of what you're doing. And then they charge you a fee. And at the end of the day, I think a lot of these fintech propositions when it comes to investing have two problems. One is they're highly commoditized. So they're all starting, I think robo-advisors are a great example. You're starting to see that with challenger banks, and you're starting to see that with all of the neo brokers as well, the challenger brokers. They all, at the end of the day, now look the same with a different interface, in my opinion. And as an end consumer, it's very difficult to understand which proposition is best for you. That's point one. Point two is, specifically when it comes to investing, a lot of them are a bit like a black box. You don't really know where you're putting your money into, and you kind of feel, hey, I worked so hard for all these savings. I'm just going to give you the money and then kind of hope that it's going to go well. So that's number one from my personal observations. The second point is, if you look, I started to basically look, okay, am I the only one with this problem? And I very quickly realized that I'm not. So I am part of this millennial generation. So like, I guess 20-ish to mid-30, late 30s. What I found was that 86% of millennials actually save each month, but they keep more than half of their savings in cash because, as I experienced myself, there isn't a suitable way for them to get financial advice. Mm-hmm. And so then I started to look into, okay, so why is this such a widespread problem? And there really was this one very interesting trend that I saw, which is, if you look at the data, since the year 2001, every single year, with the exception of 2 years, the percentage of money that millennials put into the stock markets has declined. And this is in spite of all the new propositions that have come to market. And the reason, the driver of this downward trend very much correlates to the experience that I had myself. And so 72% of millennials say they want to take action, they want to make an investment because they have the money to do so. But these 72% say they lack the know-how to do so. And that was exactly me. And then the interesting thing is, of the remaining 28% who do take action, 90% of those say they consult their friends and the media before they take action. And so that's really what Finis is built on.
That's really, really interesting, because so one of my personal bugbears is around, so obviously I'm the CEO of a publicly listed company, and when we looked at how best to communicate our story to shareholders, we discovered that basically investor communications really hasn't moved on in 20 or 30 years. Like you go and you talk to the investment banks and you say, okay, how do I communicate with shareholders? And they say, well, you've got boiler rooms or banner ads. And those are still, fundamentally, it's kind of like, I can buy a banner ad on a popular website, or there are still rooms full of people that phone up dentists and pitch them stock ideas.
Yeah.
Now
you can Wolf of Wall Street.
Yeah, that still exists today. It's crazy. And we kind of made an interesting observation, which was the biggest, I guess the first time we've really seen millennials get interested in investing was around the crypto craze a few years ago. And for a lot of people, that was a pretty unfortunate investing experience. But I think part of what drew people to it was people in that crypto world communicated to millennials in the way they were used to being communicated to. So it was Instagram, it was Facebook, it was, it was all driven through social media. So I think it's a really interesting point. I think that the mode of communication and the form of communication is completely disconnected and alienating to a younger generation. Has that been your kind of experience as well?
Yeah, 100%. Although, I guess crypto, I agree that was a way to get people into this finance world, possibly for the wrong reasons, because I think people were chasing the quick return, which is never a good idea. But yeah, I would agree with the communication point. I still think there's also a certain systemic issue, right? Which is being addressed to a certain extent in the UK as well, which is setting the incentives right for the people who actually manage your money. And I think that's a really difficult problem to solve if you are the person investing the money. So that's, for example, one of the things that we've said. We don't want to ever touch your money, or because a lot of people always ask us, hey, when are you going to bring out a financial product where I can invest with you, etc.
Mm.
You know, right today, I don't think that's actually that difficult to build. There's so many solutions out there, but I think it would set our incentives in the wrong place. I think that's the systemic issue that we're trying to address.
Yeah, I agree. It's look, I mean, in the private wealth space as well, if you go and talk to the banks, you know, it's they make their money by moving you in and out of products, and even though like every bit of data suggests that you get into a product and you stay there for as long as possible, they'll still advise you to bounce around because that's
Yeah,
where they make the margin. So
that's where they make the money. Yeah.
cool. So you've been building this for, sorry, how long? You mentioned 6 years?
Since 2016, end of 2016, I think we launched it officially.
Okay, great. And you're all over the world now. I notice you're running events all over the world, which is great to see. And what are some of the geographic differences that you've noticed? And the reason I ask that specifically is we're a UK PLC. We have small businesses from all around the world, and we're listed in Germany. Frankfurt is a great market to be listed on. It's very liquid. It's very well known. But the Germans have a very different approach to investing than it's kind of diametrically opposed from the US, for example. So I had a great conversation with Bernd he's the head fool in Germany. He was talking about how his parents are a little bit embarrassed that he works with stocks and shares. Do you see other kind of geographic differences as you kind of meet your community around the world?
Yeah, I would agree. I think in the US, everybody's very focused on stocks and shares. In the UK, also not so much. I think everybody in the UK, for some reason, is very obsessed by owning property. It's ingrained in the culture.
Yeah.
And then maybe stocks and shares, but it's not as big of a topic as it is in the US. And then, yeah, of course, in Germany, it's a much larger also savings culture than it is perhaps elsewhere. And then I think what for us was always really interesting to see is, as you said, we have meetups happening, all over the world. So we've in like Nigeria, people are talking about all the new way to meet up about all the new fintech propositions in Nigeria, right? Stuff like that you probably usually wouldn't really come across. Which is kind of interesting. Similar I think we had a similar discussion in Hong Kong a couple of days ago, virtually this time. So it seems like every sort of local community has their own topics that they really want to dive into. Although I think specifically around our community, everybody definitely has an interest in investing because that's why they're a part of it. And it's just a question of how much and how sort of aggressively / how risky you want to get. I think that's where these cultural nuances come in. And then of course you have also sort of tax and legal implications. In the UK you have an ISA, in America you have 401ks and IRAs, all of that stuff. But yeah, I think that's sort of the general stuff. And then I think interesting trends that we are seeing more globally is we've seen a lot of interest in sustainability, sustainable investing. We've seen a lot of interest, probably the most interest even is women and investing. So we have this initiative or this campaign called the Female Financial Dialogue. Started off as a campaign or as a meetup in London, then it kind of grew throughout the world. And then this year we had, within 48 hours, I think 20 meetups that were happening all over the world, all organized by female members of the Finis community. And that seems to be something that just really caught fire, where people had a lot of interest in it, which is quite cool to see.
Yeah, very good. It's interesting. Some of the stuff that you've touched on, I think, is really reflected in the speakers that we've got in this summit. So we have Francisco, we have Tina, both from talking about opportunities in Africa and the different countries and what the different specialties are in each of those countries. And I think you're absolutely right. We've got developing countries like that. You have opportunities to kind of leapfrog some of the more mature and ingrained economy.
Technology.
Yeah, so that's really exciting. And again, we've got a team that talks about it. Lucy also talks about it in the Middle East, women investors and how that's growing. And again, one of our themes is ESG. It's always interesting. I mean, ESG is a really interesting one from an entrepreneurial perspective. I've been talking about social entrepreneurship for more than a decade. But I really feel like in the last 12 months, that whole conversation about ESG has really started to get serious. And I'm finding you're hard pushed to have an investor conversation where it doesn't come up as something that's key. So good to see that you're seeing that as well. Talk to me more about, so content is very kind of clear. And I think just from my experience with your product, it's really about taking complex, actually they're not necessarily complex ideas. I think what you guys are very good at doing is keeping it very clear, whereas other people seem to take pride in complicating ideas. But talk to me about community, because that's something that I'm sort of a big fan of as well. What was your driver behind that?
So to be totally honest, I would love to tell you that was always the big grand plan, but it actually happened quite organically. So essentially what happened was one day we said, let's meet some of our users in London. We just went to a pub and I think 50 people turned out. And we thought, oh, that's way more than we thought would come up. And then we started doing more of that in London, and out of 50 became 200 people. And then people started writing us saying, hey, can you guys do this in New York? Can you do this in LA? Can you do this in Singapore? All over the world. And we said, we'd love to, but we can't afford to fly around the world and just host meetups, even though it would be amazing. But we said, you know what, maybe you do it. And we basically gave them the power to host meetups. And out of that, then this real sort of movement started. So we've now connected close to 20,000 people in the real world over the last couple of months. On average, there's a Finis meetup happening every day of the week, somewhere around the world. Okay. And it's really cool because we always ask people, like, why do you do this? Because we don't pay them. They don't get any perks or incentives. They do it genuinely, voluntarily. And the answer that we always get is that people tell us, it sounds crazy, but I want to make a dent in the world, and opening up the doors to financial education to everybody seems a good way to do so. And that's why I'm doing this. And I think that's really powerful because that shows you that it's really solving a real need that people have and a real desire to improve. It comes back to this point of the system being a bit broken. And I think it resonates with people that we're trying to fix this system.
Yeah, nice. Yeah, cool. All right, so let me just finish up on, I guess, so we touched on some of the trends that you're seeing. You were addressing a problem that you solved, but what are, I guess, problems that you're seeing other people new to investing making? What are the kind of the mistakes that you see people new to the community making that they could hopefully avoid if they knew a bit more?
I don't think I have like common mistakes, but I think we have a common journey that we often see. And that journey is people are very, very scared to make that first step, because I think we can all relate to that feeling. When you make your first investment, you almost want it to feel like you've eliminated all the risk in doing it, and you're not going to lose your money. And I think once you accept that that's impossible, no risk, there's no risk return profile like that, then people start doing it. And I think a lot of people start doing it with what we talked about initially, these robo-advisory platforms, because it's sort of this very easy thing to get started. And then what we see is that a lot of people get a bit more informed and a bit more educated. Mm-hmm. And then they understand how these platforms work, and they understand that, okay, actually most of them just have 12 ETFs that they invest into fundamentally.
Mm-hmm.
And then they start asking themselves, okay, why am I paying this fee every month or quarter or year or whatever it is? And then they either close it down or they take a little bit of money out of it, and then they start putting it money into ETFs like a Vanguard or what, a million of these out there.
Mm-hmm.
And that's kind of the next journey. And then people start, oh, okay, maybe I'll start also looking into individual stocks, and like that's then this like new phase for them where they really want to understand, how can I think about this, which goes beyond just, oh, I like Snapchat, so I'm going to buy Snapchat, which I think a lot of these investing apps are now really pushing. It's just buy brands that you like, which I'm not sure is necessarily a good strategy, but again, I'm not a financial expert. And that's sort of a strategy that we often see. And then I think a big question again comes like on the regional facet of it. So in the UK, I think a lot of people are really worried that if they put money into the markets, that they might lose it, and then they can't buy the house that they've been looking to buy.
Mm-hmm.
But that's sort of on a very, very high level, kind of the common thread that we often see.
Yeah, no, it's an interesting one. Going through that journey, and it's probably that little bit of knowledge is the most dangerous place.
Well, we also say, like, if you don't make if you don't take any action, that's also fine. But if you're taking no action out of an informed state rather than an ignorant state.
Yeah.
In that case, we did our job.
Very cool. Well, look, I won't take up any more of your time, but thank you very much for your support and for sharing your views with us. So for anyone watching, definitely go and check out finimize.com. And hopefully post-lockdown, there'll be plenty of meetups for them to go and meet your community in person.
Yeah.
Cool. I look forward to doing more work with you guys in the future.
Yeah, likewise. Super excited about it.
Awesome. Thanks, mate.